Bitcoin, the pioneering cryptocurrency, knows this story well. In its infancy, Bitcoin was met with doubt, dismissed as a passing fad or a tool for illicit activities. Fast forward to 2019 and a new player emerges. PiNetwork. PiNetwork aimed to make cryptocurrency accessible to a wider audience through mobile mining. The project's ambition was clear: to put the power of cryptocurrency into the hands of everyday smartphone users. However, PiNetwork, like Bitcoin before it, encountered its own share of skepticism. Critics questioned its technology, its potential value, and the feasibility of mobile mining. Despite the initial doubts, both Bitcoin and PiNetwork tapped into a growing desire for alternative financial systems. The parallels between Bitcoin and PiNetwork's early days highlight a recurring theme in the world of innovation. New ideas often face an uphill battle for acceptance. As both projects have shown, overcoming initial doubts requires addressing concerns, building trust, and demonstrating tangible value. PiNetwork's journey began with a vision of democratizing cryptocurrency mining. Unlike Bitcoin's energy-intensive proof-of-work system, PiNetwork opted for a mobile-first approach. This approach aimed to lower the barrier to entry, allowing users to mine Pi tokens using their smartphones. The project gained significant traction, amassing a large and active community of users eager to participate in this novel experiment. On the February 20th, 2025, PiNetwork reached a significant milestone: the launch of its mainnet. This marked a pivotal moment, transitioning Pi from a testnet environment to a live, operational blockchain. The initial market response was met with a mix of excitement and volatility. Pi's price surged, reaching a peak of $3 in the days following its exchange debut. However, this initial euphoria was short-lived, and within a month, Pi's price experienced a sharp decline, falling below $1. Adding to the challenges, the mainnet migration process was not without its hiccups, fueling concerns about the project's stability and transparency. As PiNetwork transitioned to its mainnet, the project introduced supernodes. These nodes validate transactions and secure the network. However, their implementation sparked controversy over centralization. The Pi core team handpicked the initial supernodes. This raised concerns about centralization and transparency. Users demanded greater transparency from the Pi core team. The lack of clear responses eroded trust and fueled speculation. The debate surrounding PiNetwork's supernodes echoes a fundamental tension in the cryptocurrency world: the balance between centralization and decentralization. Bitcoin, despite its decentralized design, faced similar scrutiny in its early days. Critics questioned the distribution of Bitcoin, the influence of early adopters, and the potential for manipulation by miners. Bitcoin's proof-of-work consensus mechanism, while designed to be decentralized, relies on miners with significant computing power to validate transactions and secure the network. This has led to the emergence of large mining pools, raising concerns about potential centralization and the influence of a select few entities on the network. PiNetwork, with its Stellar Consensus Protocol (SCP), aimed to address some of these concerns. However, the supernode controversy highlighted that even with a different consensus mechanism, achieving true decentralization remains a complex challenge. The tension between centralization and decentralization is likely to remain a key area of discussion and evolution as the cryptocurrency ecosystem matures. Volatility is a defining characteristic of the cryptocurrency market. Bitcoin, throughout its history, has experienced dramatic price swings, riding waves of euphoria and weathering periods of intense correction. PiNetwork, in its nascent stage, has also been subject to this inherent volatility, experiencing a sharp price decline following its initial exchange listing. Several factors contribute to price volatility in the cryptocurrency market. News events, regulatory announcements, technological advancements, and market sentiment all play a role in shaping investor behavior. For newer cryptocurrencies like PiNetwork, factors such as the rate of adoption, the development of use cases, and the overall success of the project in achieving its goals can significantly impact price discovery. Bitcoin's price journey offers a valuable case study for understanding volatility in the cryptocurrency market. From its humble beginnings, Bitcoin has witnessed multiple bull and bear cycles, each driven by a unique set of factors. These cycles highlight the importance of a long-term perspective and the need for investors to approach the market with caution and a clear understanding of the risks involved. As with any investment, especially in the volatile world of cryptocurrencies, diversification and thorough research are paramount. In the decentralized world of cryptocurrency, community is more than just a group of users. It is the lifeblood that sustains and propels projects forward. Both Bitcoin and PiNetwork, despite their technological underpinnings, owe much of their success to the passionate communities that have rallied around them. Bitcoin's early days were marked by a fervent community of developers, cypherpunks, and early adopters who believed in its potential to disrupt the financial status quo. They evangelized Bitcoin, contributed to its development, and defended it against skepticism and criticism. This grassroots support was instrumental in Bitcoin's survival and eventual rise to prominence. Similarly, PiNetwork has fostered a large and active community. Millions of users have embraced the project's vision of accessible cryptocurrency mining. This community has played a vital role in spreading awareness, providing feedback, and contributing to the project's growth. The power of community in the cryptocurrency space cannot be overstated. Both Bitcoin and PiNetwork serve as prime examples of how a dedicated community can turn a promising idea into a thriving ecosystem. Bitcoin's journey to becoming a global phenomenon is a testament to the power of persistence and adaptation in the face of adversity. PiNetwork, as it charts its own course, can glean valuable lessons from Bitcoin's playbook. Bitcoin's early years were fraught with challenges. Technical hurdles, regulatory uncertainty, and negative press threatened to derail its progress. However, the Bitcoin community persevered, addressing issues, refining the technology, and engaging with regulators. This unwavering commitment to the project's vision proved essential to its eventual success. Adaptation has also been crucial to Bitcoin's evolution. Over the years, the Bitcoin protocol has undergone numerous updates and improvements, addressing vulnerabilities, enhancing security, and expanding its capabilities. PiNetwork, as it matures, would do well to embrace these same principles. The cryptocurrency world is dynamic and unforgiving. Only those projects that can adapt and evolve will stand the test of time. PiNetwork stands at a crossroads, poised between its vision and the challenges of disrupting established systems. The project's potential is undeniable, with its large community and mobile-first approach. However, it must navigate technological, regulatory, and community-driven hurdles. Addressing centralization concerns since the introduction of supernodes is crucial. Transparency in supernode selection, Pi rewards, and governance is essential. Building trust through open dialogue with the community is paramount. PiNetwork must refine its technology and explore new use cases. Demonstrating tangible value and utility is essential for adoption. In a competitive market, PiNetwork must offer compelling value. In cryptocurrency, trust and transparency are necessities. The world of cryptocurrency is still in its infancy, a frontier of innovation and experimentation. PiNetwork, with its ambitious goals and passionate community, has the potential to play a significant role in shaping this evolving landscape. However, as with any investment or participation in a new technology, a cautious and informed approach is essential. Before investing time, money, or belief in any cryptocurrency project, thorough research is crucial. Understanding the technology, the team behind the project's goals, and the potential risks involved is essential for making informed decisions. The cryptocurrency space is rife with misinformation and scams. Due diligence is paramount. Engaging with the PiNetwork community can be a valuable source of information and insights. Participating in online forums, reading articles and analyses, and asking questions can provide a deeper understanding of the project's strengths, weaknesses, and potential trajectory. The journey of PiNetwork, much like that of Bitcoin before it, is a testament to the power of innovation, community, and the enduring human desire to explore new possibilities. The future of cryptocurrency is unwritten, and projects like PiNetwork are writing the next chapter.